cover here is your how you trade. Okay, so walk me through um, how you set up. So what time frame? Like when you start off, what time frame are you starting off in, and basically how do you start looking for trades?
I usually start with the 2 hour, uh, the 1 hour and the 2 hour, but mainly the 2 hours.
All right, so I'm gonna slide over
Like
here. Let me go to the 2 hour. So what are you looking for on the 2 hour?
I mainly look at the moon indicator. So, so I would look for the RSI heading up, especially if it's over the 20 line.
Okay.
And I would put just like we did yesterday, I would put a error there to mark it. Let's say if I missed it, and I went straight to the 2 hours, and I look at the 1 hour and see if there wasn't if the RSI was up as well over the 20 line. All right.
So I'm gonna start off. That's gonna be the yellow, which is gonna be the 2 hour. Okay. So we're looking for the 2 hour breaking the 20. Right. So you
All
start
right.
at the 2 hour. Then where do you go?
And then I would wait for a 2 hour red moon. I mean, excuse me, a 2 hour green moon, and I would put a box in the moon indicator volume section. About no, no, on the moon indicator, not on the chart. On the chart, I would put a box next to the either the buy signal or okay, that's fine there. That white box in the chart can stay there because I would do the same thing. I would trace where the moon started on the moon indicator, and then I would do the same thing on the chart.
Okay. So this is our start here. So we're looking for that. Perfect. Now what's
Hmm.
the? Let's say this is going in there. Okay. Start at the 2 hour. Then where do you move to?
I moved down to the 15 minutes.
What do you do on the 1 hour? You just make sure the 1 hour is on its way up as well.
Right, just as a volume confirmation,
Okay.
or at least the trend is heading in the same direction as the 2 hour.
So if at that time you see that the like right now the 1 hour is kind of pointing down, right? So at that time, if you see that, then what you're waiting for is for that to reset.
No, I would simply go down to the 15 minutes and wait for the 15 minutes to go above the plus 10 line.
Okay, so that's just to kind of like give you an idea of what the current momentum is, and then you kind of
Right.
go. You're right. You go back to your um, looking for things anyways, right? Because you haven't had anything that you're making a trade. You just wanted to see the confirmation of what it possibly looked like. Okay, so now we
Like
slide
this
down.
morning's trade would be a perfect example of how I do it.
Okay, because you would be waiting for the 15 minute to break the 10 threshold, which happened right where that
That's
box is.
right.
Okay, so then that's where for you is okay. So now that's your strategy for finding the trade. So now what we need is okay. Now we need the next strategy, which is your entry strategy, right? How you enter the trade, right? So now let's go over
Then
here. How do you enter this trade? Because you got your 2 hour over here. The yellow line broke. You've got your green 30, or I think this is your 30-minute box, right? Or your 2 hour moon. What was that? So this is the.
the 2 hour moon.
All right. So you wait for the 2 hour moon. Let me name this 2 hour moon zone.
What I do, I use it's a combination of several of your strategies.
Okay, we got the 2 hour moon zone, and this is the 2 hour RSI 20 line.
Hmm.
Okay. All right. So
And
now, go ahead.
and another confirmation I do is I do the green, blue, green from the 1 hour, from the either the 1 hour RSI heading up at the 20 line, or from the 1 hour green moon.
Okay, okay, right now I'm at the 15. So you want me to go to the so the 15 out is breaking the 10 threshold.
Right.
Okay, so I'm just gonna like we'll have that box in there, and that's just the breaking of the threshold. So what I'll do there, so let's say we see all this happening. You then go. So what you're gonna so your entry is what, the 1 hour moon reversal?
Uh,
Or is it a 15 minutes?
I don't know what it's called, but you see where that 1 hour, right, where the 1 hour moon, either the 1 hour moon or the 1 hour RSI heading up, and then I would go into 15. In addition to having the 15 minutes above the 10 threshold, I would count the moons from the 1 hour under 15 minutes. So if you go back under 15 minutes, I would do green, blue, green.
All right, so here you go, blue, green, to green.
No, it would be before that. It's from the 1 hour.
All right, so you
see where that? No, you don't need to go back. Put an arrow where mark the 1 hour green moon.
Okay. What should happen right about here? So I'm just gonna push this through a little bit, and I'm gonna make that white. Actually, no, I'm gonna make that blue, so we know that's the 1 hour. All right, so this is the 1 hour green moon.
Right.
Okay. So now we have the 1 hour green moon.
I go back to the 15 minutes.
Okay.
And then I'd go, I'd skip this blue moon under 15 minutes. I'd go green right here, and then blue, green. So that would be further confirmation of the volume.
So this
and then I also use the 15-minute rule, where if the 15 minutes is above the plus 10 threshold, then I can enter under 5 minutes. Then I would go under 5. Then I would go down to the 5 minutes.
Okay, so that's a moon reversal, meaning that a moon goes from a color to a color back to a color. Okay, so that right there is the 15-minute moon reversal. Okay. So then that right there would be where you'd be looking to enter. And then what's the next confirmation you use?
I'd go under 5 minutes and find that, and then I usually try to enter like 2 minutes before, right where you at. See, 2 minutes before the 5 minutes of the threshold.
Oh, okay, so right in here.
Right.
So you're waiting for the volume to break the 10 threshold.
That's right.
Okay.
Because I do that to fix, because sometimes I get too greedy and I lose a trade. So my goal in that is to get the greediest entry, the earliest entry as possible. And then I would go to the 2 minutes. Now, see where it says the 15-minute arrow, since the 2 minutes already broke the 10 threshold, then I have more confidence to enter on that 2-minute green moon right before that 5-minute entry. So that'd be another option to enter earlier.
Okay.
So that green moon, that 2 hour green moon, that's under the volume. that's under the zero threshold. I either enter here, move your arrow to the right, right, keep going to the left. That this red moon, this green moon right here, right
okay.
before the
This
5 minute entry. Not
So
this
this
one,
one.
not that. This one. I would either enter that one or wait for it to go above the 10th threshold and enter here.
Okay. Okay. So I mean that's you have multiple confirmations, right? So let's go back here and just kind of pull up the what we have on the chart. Okay. So very good that we have like how we're entering here, right? So the first thing is what you're doing is let me pull this down. There we go.
And one other step confirmation is I would put a box next to the buy signal on the chart, but it's the same thing, just further confirmation.
Let me get this all so we have it. So what's the next what's the next thing you do? You'd put a box where?
I don't get the buy signal on the chart, but on the 2 hour chart, I would put a box where the buy signal starts.
Okay. So you're using the VC tracking chart indicator. Okay.
I'm using that as well. Yeah.
Okay. So I like it, man, because it's a very clear breakdown of how you're entering this trade, right? So the trade that you're doing, you have very clear things that you're doing here, and you're using the bigger time frames, right? This is, this box right here is the 2 hour moon, and that's really just solidifying that this is going to be a trade that is going to have some movement to it, right? So let's see here. So we have the 2 hour RSI breaking the line, right? And the one thing to understand, when that happens is that the next level to this is, the third move is the 2 hour breaks the line. The 4 hour is there's going to be a pullback for the 4 hour to get in there. And then the next trade is trading into the 4 hour breaking the line, right? So let's go
That's right.
Okay.
And the next move, I would chart for the 4 hour RSI when that comes up, and also put a box around the next 4 hour green moon as well if that comes up.
Okay. So what I'm going to do here is I'm just going to fix some of these lines up real quick. All right. And I'm going to put the 4 hour breaking the 20, which kind of happens. I mean, it's on the 20, but it doesn't show a big move until this further zone right here. So I'm just going to put this up, change this to white, add some text. This is the 4 hour RSI 20. Okay. So that's where the 4 hour kind of gives us where it breaks the 20 line. I'm going to slow down here, and I'm going to pull up the 2 hour just so that we have all that lined up correctly. So here's the 2 hour RSI breaking the 20 line, which we have right here. And then we have, let's see, that's the 15-minute moon. That's the entry. I think that was my 4 hour. Let me, pretty sure that's the 4 hour. All right, moon. Okay, what's this? So then we had the 2 hour green moon box. Perfect. Now we're going to slide down to the 1 hour. And that's going to be the 1 hour green moon. That's correct. 2 hour breaking the line. And this. We'll come back to that. We'll delete that. Okay. So 2 hour RSI, 1 hour green moon, 15-minute. Okay, so now we got all this set up. All right, so let's go dig into this a little bit deeper here and to see how we have everything set up. So I like the fact that we start off on the 4 hours, so that's a good look, just to get an idea of what's happening out there. The 2 hour when you're working where you're scalping. So this is where having a system of, you know, what you're building on there is going to be a little bit deeper, because you're building the system into how you're trading here, right? So what we would do here is, okay, we have a 2 hour RSI breaking the 20 line, right? So this right here gives us our first real look. I'm gonna make this a little bit thicker, just because that's kind of where we start our trade. Then we're looking for some type of confirmation, which is the 1 hour green moon, which we have, right? And that puts us in a situation where we start looking for a trade in this scenario. So let's slide down to the 10-minute, because that's kind of like the basis of it all, right? The very first thing that you're doing is you're looking for a 2 hour RSI breaking a 20, right? Now this is where, remember, the fundamentals of, you know, trading 102, right? The trading 102 is basically, you know, when something happens, now we look for the simplest pattern that happens, right? Which is what? The 1, 2, 3, right? So we're going to see a push, we're going to see a pullback, and on that pullback, that's where we're going to see that move to the upside, right? So here you have the 2 hour RSI. You see the jump that happens with the RSI, right? See how it pushes right there? Now, what happens to most people is they make the mistake of getting in on that jump or that FOMO, and then it happens to pull back on them, right? And then they're in, depending on their leverage, depending on how they're trading, this becomes a situation where now they're in the negative, right? And depending on, you know, how much leverage you're using, you could literally get stopped out or be down 30% or be down 5%, right? The bottom line is, when this breakout happens, right, and we know why this breakout is happening right here, is because the RSI is broken up above the 20. So if we took a look at this moment and we kind of went back a little bit and we seen that there was a channel here that was already formed, right, allows us to understand that we have some tops and some bottoms here. And these tops and bottoms are already formed in here, right? So they're kind of like in this little zone here, okay? So now what that does for us is we kind of have an ideal of what everybody's looking at, what they should be trading, and how they're going to trade. So most of the time we're going to look for a breakout above that support or that resistance zone, which with the 2 hour RSI breaking above the 20, we get that to actually happen. And then from there, we know that if we've seen this trade happen, our instinct is to put a buy signal on the retest, right? Which would be about 135.89, right? Because you're retesting the resistance area and so forth, right? So that's where you would be looking at this particular trade like a normal trade. Remember that we have the steps to follow. So when you see the RSI above the 20, now you have an ideal to go, okay, I need to see a push. I'm going to look for the pullback, and that pullback is where I'm going to look for an entry. Now, your confirmation is during that pullback, what happens? You get a 1 hour green moon, right?
Right.
So when you're seeing that pullback happen, you can turn around and say to yourself, oh, I'm getting, because if you set an alert on the green moon, right, the alerts will pop up on the side of the indicators, like on the alert section. You will get the confirmation. It'll start saying like moon indicator alert. Now the moon might start flashing at that moment, and a lot of times when you don't have the additional information or knowledge, you don't realize what that means, because you're like, all right, it's flashing, but what does that mean, right? That means it's coming. Now what you need is confirmation of what's coming, right? When you see that, if you're already knowing that your first move was the 2-hour RSI, you know that the pullback that's happening is the second move down. So when you start seeing the moon start to flicker, this kind of lets you know that, okay, I'm in a area of a trade, right? Which would basically give you confirmation that if you did this retest of this trade, more than likely it's going to be a successful trade, because it is going into a 1-hour moon. Normally when you go into a 1-hour moon, what happens? You get some type of value, right? So it's a higher percentage possibility of a trade being successful, because not only do you see the first move and the move back and the third move that's coming, but you're also seeing the 1-hour moon, which is creating more confirmation for you that this is more than likely a better pullback entry than most that you're going to see, because now you have a reason for it to actually bounce when it does the pullback, right? That makes sense?
Yes.
Okay. So now, that's kind of a way to get that entry side. Now, the other thing that you're doing is you're going a little bit further, because what you're looking for, which is smart, you've built in extra steps to confirm the best possible entry, right? Which most of the time you would say to yourself, like, okay, I need the 15-minute moon reversal. So I need a green, blue, green. And I'm going to enter on that next, that set. What that does for you is it protects you from any type of possible pullbacks that happen, those wicks that happen that could, go further than they should down. And it allows you to get, at least confirm that you're moving into the momentum of the upward swing, right? And then entry on the 5-minute threshold, you're using the 5-minute threshold to give yourself the opportunity to see where the volume is at a level that basically, once again, gives you another percent of success, or information that this is moving in the right way. It's trending where there's actually volume coming in, so the odds of it being successful have just gone up another 20%, right? So yeah, so all these steps are great. This is a good scenario here. And so when we break it down now with we call it the bare bones, right? The purpose of Trading 102 is to give you very specific steps that you can quickly analyze something without overthinking it, and then use the system that you have to confirm it, right? So what this is now that we know the 2-hour RSI, so now you know why there was a jump. Then on the pullback, that's the pullback because that's the second move, and now you're looking for the third move to be the better move. You get a 1-hour moon, which confirms the third move, which normally would give you an opportunity to get in that trade. Now, where people mistake this, where you're increasing your odds of success here, is that most people can get in this trade. There is a pullback that does happen. It does go back and touch the lower level of the channel. Now, depending on people's system, which is how big is my bag, how big is my leverage, this could either make or break their trade, depending on how much leverage they use. And that's where understanding how to build your system is going to be the biggest thing that you do, because you have to have a system built first, and then you put a strategy to that system that they work together to allow you to be more successful. So depending on this particular move, and what I mean by that is that, let's say someone jumps in at that resistance level of 1394, right? If we measure that out from the bottom to the top of our support area, This happens to be a 1% move, right? So you see how that's 1% there? So what that basically means is if they're doing a 100x, then at that moment they're going to lose 100%, means they're going to get stopped out. Let's say that they're doing a 50x, right? Which most people do. It's XRP. A 50x is pretty common. That 1% drop is what? That's a 50% stop loss. More than likely, most people are going to run a stop loss that are 25 to 30, maybe 35, depending on how good you are. But more than likely here, you're going to get stopped out because majority of people will be 25 and below. The people who really push the odds are 35 to 50, but they end up losing a big chunk of their bag most of the time, and you have to have a lot of money to make up on that bag so that you can grow it, the proper way, right? So either way, this 1% move is big. You don't want to see an average pullback more than 1%. 1%'s kind of like our, man, we need to do better, right? Because if your entries are 1% off most of the time, then you're not doing something to find the value. And what you're doing here is you've already put in one of our steps, our systems, to protect you from these type of things. So now, since you've watched all our videos, you now understand why that happens. Does that make sense?
You can tell. I watch them over and over too.
Yeah, because the reason why we have all those videos and we keep them in the archive is because you have to develop, everyone needs to develop strategies that fit how they think, right? Well, it makes sense to me. How does that make sense? And what Trading 102, this course is for, is to basically create and teach people that how to evaluate how to actually evaluate the information they have and then execute on the information that they've learned. So it doesn't matter what you've learned, now you know how to execute it. Now the good thing about you being in the academy or inside the Discord is that what you're giving me is how we do trades. The one thing that you'll get from this now is that now that you've watched all those videos, you don't have the why, and you don't have the understanding of the why and how we do it or why we do it. But now in Trading 102 course, you will get the information to answer that question. So now when you start to trade and you start doing these steps, you will understand why these steps exist, which will then give you an extra element of understanding. So now you can start to see the trade clearer and then start to really enter the details of what's happening, because now you understand the why. That makes sense?
Yeah.
And that's what it is. So now you understand basically, and this was a beautiful example because now you're going to understand why we have these other elements for you to follow to protect you from, risk, right? So by having that, there's a 1% gap there, right? Which is, normally going to be death for most people here because they're going to use a leverage that's about 50x. Now, if you're using a 25x leverage, that means you would have went down to 25, which is still a big stop loss. 25 stop loss is probably most people's average. Most people don't run 30 to 35 like they should because they don't, they don't have their system set up properly, right? So more than likely, this pullback that happens here would have ended most people's trades, and then they would have had to re-enter here. Now, what happens is they don't re-enter like they're supposed to, and it ends up taking off, and then they get in somewhere on that big push, and then it ends up coming back down on them again, and they end up losing 2 trades and say, I'm done with this XRP. So you have a system here. You got your entry. We know it's a 1% pullback. You wait because you need confirmation, which is good.
Right.
So you wait until we get a little more out of this where we see a 15-minute moon reversal, right? Now that puts you a little bit down the road here. And now that you understand that you've already gone through the up move, the pullback, and then the push up, and you see that the push up wasn't that much volume, you don't have to sit there and guess like, oh, I wonder why this didn't actually like keep going. Well, you were already looking at the 5-minute volume. The reason why it didn't keep going is because there was no money. So
Right.
you're not, you see how right now you're going to be able to kind of like go, oh, the light bulb will go on like, oh, now I get it. Where most people will see this not having value, they might decide to do what?
Enter a bullshit trade.
Right. Or a short, because they're like, oh, this isn't breaking out, this is going to go down, because they don't know how to look at volume, right? Rule number one, volume is king. So if they don't understand that, they'll be looking at this as into rule number three. What's rule number three? When something doesn't do what it's supposed to do, then we know what it will do, right?
Right.
Now the thing about this is, this hasn't broken below support and then retested and went down. So there hasn't been a 1, 2, 3 move to the downside. So you shouldn't be thinking a short right there. And the volume is still moving to the upside because you're watching it, so you're still in the long position. And now you're watching the moon reversals, right? Which come around and start to happen. Now let's say that moon reversal goes from green to blue, and then all of a sudden that blue moon breaks below support, and then it turns into a green moon and does a retest. Now you should be thinking, oh man, this is probably going to 1, 2, 3 down. See what I'm saying?
Right.
Because
See,
now,
that's the thing. I mainly use the volume. That's one thing I need to learn. I don't mess with the chart too much until I'm entering. I mainly use the volume to indicate where, if it's a good trade or where I should enter.
yeah, that's all you should do. Like, the charts and everything, they don't mean anything until they actually become valuable. So, I mean, honestly, volume is everything. So if you're following that number one rule, you're not caught in emotions. You're not, you're not like, oh. And that's where using the bigger time frames to get yourself into positions where, as things start to happen, the bigger time frames, like when the 2 hour breaks to 20, and then our entry, like the student trade, is wait for the 2 hour to break to 20, wait for it to have a pullback, and then enter when the 4 hour breaks to 20, because that's where it's going to have its bigger jump, because that is the influctuation of volume, right? So that's why I went over here and I went and found the 4 hour RSI breaking the 20. So if we go back down and we kind of like look at how we're piecing it all together, right? So when you go down to the 4 hour, you see right here where the 4 hour is starting to go sideways on the 20, and then right here is where it finally breaks up from the 20, right? It's where it finally prints. And guess what? That's that line right there. I'll make that a little bit thicker because that's a key zone. See that right there? So right here, the 4 hour breaks to 20. And that gives us our 4 hour up here, our 4 hour RSI breaking the 20, you see? So now when we go back to the chart, let's say the 10-minute chart, we can see as this ran its course, the 4 hour, when it broke the 20, that put us in this other zone here. So now if we look at our support and resistance, and I'll make this blue. Actually, I should make that yellow. Right? We see the breakout, right? And what do we see? So we have a breakout above the resistance. Then the 4-hour RSI breaks to 20, right? And we see this little pullback. You see that? You see how that happens, Ed? Did I lose your brother? Ed, you there? Carlos! I see you talking, but I don't hear you. Let me see. I see you talking, but I don't hear you. So we'll finish this, like I said, because this will be all in the video
Yeah,
anyway.
I can hear you now.
There you go, bro. All right, so you see how, like, on there, now that you see how this breaks out of the resistance area.
Can you do a quick recap? Last thing I heard was something about the 4 hours, and that was it.
Okay, so this right here is your 4-hour line right here. See the arrow?
Right.
So this arrow right here, this is the 4-hour RSI breaking the 20 line. See that right there? Now, that happens, right? So what's the student trade? The student trade is the 2-hour RSI breaks the 20 line. We look for the pullback to where the 4-hour RSI breaks the 20 line, and then we enter a trade, right?
Right.
So here we can see that it's chopping through the channel, right? Now this is after you have an entry here on the moon reversal. So there's your moon reversal. That gets you into the trade earlier. Now during that scenario, you can enter a trade here, and all you're really looking for is any type of pullback or movement or rejection of that resistance, and then you buy that next dip, which would buy right about there. And that also coincides with where you would be going entry on the 5-minute threshold. So this would put you as an entry right here when it's hitting the support zone. So you see how you could use that channel as an ideal of when you see that pullback happening, that's probably going to be the entry you're looking for, because it's pulling back into your 5-minute volume threshold.
Right.
Then the normal trade that most people look for is a breakout from the resistance, right? Which we can see happens right there. And then the pullback, which is right there. And right at that moment, right where this box forms here, we can see that we're actually forming a 2-hour moon right at that moment. And we have a 4-hour RSI breaking the 20. So when this pulls back here, then that gives us definite information that on this little pullback, this is an entry, because this entry is the 4-hour RSI breaking the 20 line. See how that works?
Yeah.
So you see, like, it's almost like steps. They work themselves into these trades. So what you're trying to do is to be a more successful trader, or to get the biggest gains when you're a trader, is that you're trading the 2-hour RSI into the 2-hour moon, into the 4-hour RSI,
Right.
right? Reasons for the trade to actually move. So you're trading into the jump, the pump. And this is also why you set targets for those jumps and pumps, because you're expecting them, and you also know that once they happen, there has to be a pullback and then a third move to that, right? So we can see here, If you're trading into the 4-hour RSI, which is right here, you would have got this big jump up to here, right? Which then you could have turned around and said, okay, I'm looking for a pullback, took some profits, and then you got a pullback, which ended up being the moon. And on that dip that's happening, when it starts to reverse on this section here, you could say, okay, I need to get in there because now I know that I'm going to get another move that's bigger to the upside. Right. And that happens to be your 1, 2, 3. Now, once that happens, you take your targets and you wait for what? The pullback. Here's the first pullback, a sale. Then it bounces. And when it bounces, it does what? A third move down. See?
Right.
Which then at this point, if you're looking at the volume and everything, you know that it's going to continue, and it has, we'll just put an arrow here, turn it red, so that we know that's the final pullback. We know that when all that happens, if we're looking at what we're looking at, we can see here and if we go back and look, we can see that the 1 hour is heading down, right? That's the first move down. We know that it's going to bounce into the next move, right? So we can take advantage of that bounce, and then we're going to long that bounce and then short the next time the 1 hour comes down. See what I'm saying?
Yeah.
So that's where you're kind of understanding that where the momentum is. Now the beauty of this is you can look at the volume, and the volume shows you too that you had a push to the 1 hour through the threshold. The 1 hour then went sideways right there, which is that arrow. When it decided to go back the other direction, there's another entry right there. You see that?
Yeah.
Now when the money starts to finally go down, which is right here, you get a blue moon, right? I'm going to put this here. That is going to be where the actual short would have happened, see? On that candle right there.
Yeah, I don't use the 1 hour like that because I noticed I was taking a lot of C trades, so that's why I started using the 2 hour and the 4 hour
to see how it's building. Yes.
Right.
Yeah. So that's where you can see that pullback that happens, right? Now we know this pullback is the third pullback. It ends up bouncing here, right? So now what we're looking for is the bounce, the pullback, and then we're looking for another push on XRP, just like we're doing now on the 15-minute. So everything you're doing there is perfect, right? Now what you have to do is kind of build the system, okay? And now we need to track your trade. So what I mean by tracking your trade or building your system, so we'll end the lesson today on this, right? So here we go. So let's get back into your system. So I'm going to go back to the 10-minute or the 15-minute where you were. We're going to find your entry, right? So based on everything you did here, this is trade number 1, the style that you would have done. Now we have to start doing trades, but here's an ideal. Your entry would have been somewhere, and I'm going to put it on the highest side of the entry, just because sometimes, you never know where the entry is. But I'm going to call it 13 or 135.94. Now, I'm going to measure that to the downside, just so that we have an ideal. So that pulls back about 0.7, okay? And then the position that it actually runs is 4.4. So now we would track this based on how you're trading right there. If that's following the same steps every time, we know that trade number 1 has a 0.7 down and has a 4.3 up. Okay? Which means, right, in this scenario, what you would be doing is cutting this in half. So you would say that there's a 2% move up, right? So our goal is to make 30%, which means that if we cut that in half, we have a 1% move, right? So we would want to be in this scenario where we're doing at least a 30x leverage, okay?
30x.
So you'd be wanting to do about 30 to, let's say, 33x, okay? Now, if we look at that and say our down is about 0.5%, that means that our leverage or our stop loss would be at 15 to 20, maybe 25. So your stop loss would have to be sitting at about 25%, and your target would be set at 30%. Now, we go in there and we start off and we do $200 trades at that. And that's what we take. And right now, we have to track every trade that happens and get the ups and downs to see whether or not this formula, this system right here, is working, or where we need to tweak maybe the leverage to give us more safety. So let's say that, for instance, let's say the average, stays above, like we hit 33% consistently, right? It's just always hitting. And we look at it and we realize that it averages 2% every single time, right? Or 1.5. Then we can turn around and go, okay, our leverage could actually go down to 27x. And that'll allow us to take our stop loss down to 20. So now if we did lose that trade, instead of losing 25%, we would only lose 20. But we're also hitting our gains. And once we have that flow and we see enough constant information on that, and we could see that we're always moving that direction, then, because most people go, well, when I increase the target from 30% to 50, if I'm moving 1.5? No, because you want to decrease the risk first. In order to make more money on this trade, so 25%, like 30% of this is $60. If we want to increase the money, we have to first decrease the risk, which is lowering leverage from 33 to 27, hitting every single trade. Then we can turn around, now that our stop loss can go from 25 to 20, or we can leave it at 25. It just gives us a bigger, in case there is a wick, now we're at less risk of hitting that crazy wick that might happen, right? So if we keep it all the same except changing our leverage to 27, that gives us a bigger area of stop loss, and we're hitting our target. Once we get all that set up in that direction, then what happens?
So in this scenario, we're assuming that it's gonna go half of 4.3%.
Say again?
So in this scenario, we're assuming that it's gonna go half of 4.3%.
Yeah.
Okay.
Yeah.
The math is mathing. All right.
Yeah, we're always doing half of half. So we're doing half of 4.3 and half of that.
All right.
So we're doing 50% of 50%. So we're already basically worst case scenario to improve our odds.
Okay.
Now we go from making $60. If we want to make 120 on this trade, once we see that we can consistently win this trade 8 out of 10 times, now we can up the money from 200 to 500. And now we're taking in, now our difference is we're taking in our 30%. Now it's $150 a trade instead of 60. See what I'm saying?
Yeah.
And that's first decrease. First we decrease risk, then we increase profits. Make sense?
Yeah, that makes sense.
So that's the beginning of how to build a system, right? So here's our system, right? And once you have a basic system like this, which is normally a system is this. I want to take a 1% trade. That's why I moved it to 1%. I want to do a 1% trade with 33% leverage, and I want to make 30% every time. Then I want to be able to put a stop loss and get an entry where I know that my entry can be at 25% stop loss. So this way, whatever I lose is equal to 30% because there's fees as well. So that means that this is the basic formula that we start with. Get 1% moves, 33% leverage, target 30%, stop loss 25. Win 7 out of 10. What does that mean? If you lose 3 and that's 30%, 30, 30, 30, that means let's say you had $100, you would lose 30, 30, 30, you would lose $90, right?
$90, right.
On the other hand, if you win, it's $30 times 7, which is 140, right? Or 210.
Right.
So now minus your loss, 210 minus your 90, just call it 100, 110, right? 210 minus 110 for fees miscellaneous, that means you made $100. How much was your bag? $100. So every time you made the trade, you made sure that you were making a $100 trade. At the end of 10 trades, you doubled your bag.
Right.
So if your bag was 1,000, at the end of 10 trades, you made 1,000. If your trade's 2,000, at the end of 10 trades, you made 2,000. And the best part here is that we're not even taking in consideration the fact that these trades are doing twice as much as what we're actually asking it for. So we have ways to double the profits. Because you can always trail the up and move the target from 1% to 1.5%, and now you're making 50% of that. So now you're making 150% on your bag every 10 trades. See what I'm saying?
Yeah. Okay. Yeah, this is definitely painting a clearer picture. Okay.
Yeah. So now you understand, like, how to build a system for the strategy. And then later on, once we have data on 10 trades, 20 trades, 30, we can start tweaking the leverage. We can minimize the risk and then add to the bag. Because if you do a $5,000 trade at 27% leverage and you target 30%, you see what I'm saying? That's $1,500. Now, the best part of that is we don't even need to target 30%. We can target 20. 20% of 5,000, $1,000. See what I'm saying? Now we're almost half of the half. Does that make sense?
Yeah, it makes sense.
Yeah. The ideal is to lower risk, hit all the targets. And now you're going to hit 10 out of 10 trades. But we'll cover that a little bit more as we move forward. I just wanted to cover, just breaking down real quick, a 33% leverage, stop loss 25%, target 30%, stop loss 25%, starting with $200. Get 10 trades done, collect the data, and then go from there. So now that I understand what you're doing, I will also do these trades. And I'll collect data too. And then that way together, we'll have 2 sets of data, and we can go back and forth with each other and then build this strategies, enters, and these 2 different strategies, and tweak our system to maximize our profits. Pretty cool, right?
Oh yeah.
So this is why we're doing the core.
So on the second entry here, where the red arrow is, what confirmation could I use? Could I use
Well, let's take a look.
as
So
far as let the 15-minute green one reset? So I go from green to
here's
go
your
from
green,
blue to green,
right?
or
So your
I could
first
go
move,
back
right?
down to the 5 minutes.
Yeah, here's your 15-minute big move, right? You see the 15-minute big move? Then it had a big pullback. Was that blue moon? See? So your next confirmation is when it starts to head up the other direction is you're trading into that 15-minute green moon. See? Because you already know the volume has broken the 10 threshold, and when it does that, it's going to pull back, retest it, and then the third move is normally bigger. You've already put yourself in the good position of waiting for volume to actually be there. And now that the money's there, it's going to follow the same patterns that it normally does, which is a push. Everyone sells for profit. They re-enter on the rebuy, which is the retest, and then it goes even higher because people have their gains put back in, and then the people, the retail, are waiting for the retest to actually get in. You would just use the 15-minute moon reset, green, blue, green. So
and this will be that's the third move in the 15 minutes, right?
Yep. And
this
then
this red arrow here.
Yeah, and that at that point you're done. Now you're just waiting for it to play out. So you see how that blue moon comes in? What you would wait for is when the blue moon hits again, you would wait for one last pump up, and then you would short that pump. See, once that bounces, you would be looking for that bounce. And this is basically, you can see right here, there's all types of ways to see it, but that creates a double top. See the double top?
Yeah.
And then that's where you would start seeing the volume disappear, and you would be entering a short right there.
Okay.
So now you can start. Yeah, now you can start looking, going, okay. So I wait for the moon reset. I get my green moon, and on the next blue moon, I wait for one last big pump, and then when the volume starts to fail, look at the 15-minute down there. You see how the volume starts to fail down below? When the volume starts to fail on the 15-minute, that's where you see how it's pushing up right there, and then it starts to like not have any volume.
Yeah, the RSI is weakening.
Yeah, then that's where you jump in because that's when the buyers are weakening. Right now, you can confirm that. You can build a strategy for that by then going to your 30, right? And here at the 30, look what happened. The 30 pushed up, came down, did a second move, and then look how the RSI on the 30 got weak, right? Confirmation with the higher time frames gives you more information, right? Now look at the 45. The 45 pushes up one last time. Use the 45 RSI when it goes weak. Take that short. See what I'm saying?
Hey, what's the 30-minute rule again? I kind of forgot.
So the 30-minute rule is basically, if we go back and look here, if we take a look at the 30, you want to enter a trade once it breaks the 10 threshold on the 30. So what we look for is this. We look for the break of the 10 threshold, right? So what you want to do here is when it becomes positive volume, right? Which right here, you can see it breaks the zero line. It's positive volume. You wait for a pullback, which happens right here, and then you enter. So the entry on this would be this trade here, see?
Oh, okay, so, okay.
Which is just another 1, 2, 3 move, just more confirmation down the road. See what I'm saying?
Okay. It's the same concept I use for the 15 minutes.
Right.
The 15 minutes above the threshold, then I can enter in the 5 minutes. Okay.
Now, what happens there is you lose a lot of the early entry that you're getting, but in this scenario, because you're waiting for the volume to have more volume, that means it's the chance of it pulling back. So if we did an evaluation on that, then we would be able to look at this and go, okay, so let me show you how this works, right? So I'm going to take this one. I'm going to turn this white, my lettering green, okay? Now I'm going to go back to the 10-minute. I'm going to show you what I mean here. So when this buy signal happens, right? If I would have entered on this buy signal, right, and I measure, just so you kind of get the concept, if I measure from there, the biggest pullback that it had, was 0.29. So let's say 0.4. That means on average, 0.3 to 0.5 is my pullback, which means that I can do see, like you're doing a 33 leverage. Because I waited and I was more patient, I can do a 45x leverage and use a stop loss at 30% because I'm more likely to be in a situation where the volume is going to keep it up, and if there is a pullback, it won't be strong. So my 40x at a 0.5% pullback is only 20% stop loss. You see what I'm saying? So my 25% stop loss is now in a better position, and now I'm 43% leverage versus your 33. And that's how I make up for the earlier money that you made on me. I make it up on my leverage. I might even do 50 here. So now my 1% move is worth 50% of my bag versus, so I'll get 30% at the same time you'll get 30%. I'll just be in later with more confirmation of value. That makes sense?
Right. It's just slightly riskier as far as
well,
stop loss.
Yeah. So it's like it's less risky,
but at the same time,
but I have
volume,
I have to use
volume, more confirmation.
Right. More leverage, which creates a little more risk. But I made it de-risky by making sure the volume was even stronger. So I'm still de-risking it, but by de-risking it, I have to put more leverage into it to make up for my patience. See, leverage is designed to be there to make up for you being patient, not for you jumping early. Leverage is let me say it again because most people forget this, and this is the unsaid rule, and I'm going to say it here so that you understand. Leverage was designed to give you the opportunity to be more patient and reward you for waiting by allowing you to maximize your entry money and multiply it to give you the gains you deserve for being patient. Not to maximize your entry money because you jumped early. That's why everyone loses with leverage, because they don't. That's the wrong way. They're thinking the opposite. Make sense?
Yeah, it makes sense.
All right, brother. Well, that's your lesson for the day, man.
All right, I appreciate that.
Yeah, now we just need to track the trades, right? That every single, when you're in a trade, put in the 10 trade review, and then we'll go look at them and just post your trades. All right, following this trade, this happened, and say, okay, I'm in this trade. Here's my entry. Boom. And then I can look at Discord. We track how many percent it went backwards, how much percent it went up, right? And you use the basic formula that we have here. You do a 33x leverage. Your target's 30%. Your stop loss is 25. And then you just write down how far did it go and how far did it go up. And then when we have enough trades in our belt that we have an average, then we can start adjusting and tweaking leverage and things and size of the bag to get to whatever goal you want that you're trying to accomplish.
Right. Like I said, I came up with this strategy to avoid me from being greedy at the end, and also to stop taking C trades that that just didn't go nowhere.
It's phenomenal.
Yeah,
it's perfect. That's what I love about it, and it's great. Now, the difference is that's what the Trading 102 course is. It's about execution of your strategies to maximize your gains. And that's what I'm going to teach you as we move forward once we get the data. Where a $30, $200, $300 trade becomes $2,000, $3,000.
Hell yeah, that's what I'm trying to get to.
That's where we're at, man. So we'll close out that video on that, brother. I like the strategies you have. I mean, you took two different confirmations. You took two different ways to ensure that you were trading right, and then you put them together, which is awesome. That's what when I tell people find your trade, I don't think they understand what I mean. I give you multiple ways to do the same trade, You have to decide what makes sense to you and then build your steps. Find your trade. And you did a fantastic job at building your trade and finding your steps, because that all literally just it's beautiful to see and beautiful to watch. So now we can take this strategy and actually like build the important part, which is the system to execute and make the gains that we want to see. So congrats, man. I love it. I'm glad you've been watching the videos. I can tell you've been watching the videos because you're at when we're talking. This is when people say, "Well, man, this," and when I'm listening to them, it's like, "Man, you're asking me for help, but you haven't watched the video." It's not that hard for me to understand you're not watching the videos. Yeah,
Right.
like
This is a combination of many different strategies that I've compiled together to make it my own.
yeah, and this I make these different strategies because I'm trying to find something that makes whoever's looking at it where it clicks, and they say, "Oh, it's the same shit I said in the other video. I just said it differently here, but this is the one that clicked in your brain," which is okay. My job is to create, the strategies in 20 different ways that they work until it makes sense to you. And then that's when you start building your own strategies from the bits and pieces, and at the end of the day you're like, "Oh, this is how it goes." And then boom, it all makes sense. So it's good to see that actually happening and really coming together, because that's really what we really wanted right there. So that's amazing, bro. So hats off to you, brother. Way
Right,
to
thanks, man.
watch videos, because that's what it has to be. All right, guys, we're going to close out this video here. This is day 2 student review. This is Trading 102 course. And this is what it is to grow your strategy, understand your strategy, and then find a system that allows you to prosper from your strategies.